Welcome all institutional and well-established retail traders. The time is now 9:56 a.m. Eastern Standard Time. This is Jeff Killian reporting in on the current state of the U.S. markets and especially the primary market I trade here, the E-mini futures near contract month daily chart updated in real time, mark to the market prices trading at 2080.50. That's 615 trading at 2080.50. Now, the current prices have penetrated on an intraday basis shortly ago the 2079.50 level, which is substantial new intelligence that will back up shortly into the video. This level, once penetrated, traded through on a closing basis, would suggest that the market should continue to sell off based on the price action in isolation as we look at it right now. As we blow up the chart and take a closer look at these levels, to the upside, we have 2099.25 and 2106.50 for resistance. To the downside, again, current support is 2079.50. Below that, we have 2070.25, 2056.50, 2042.25, 2032, and the end move here below our major support at this pivot point low, once again established here, is 2017 and 50. Now, getting through here leaves a free and clear move all the way down unto 2070.25. This is significant because the spread on the points between here and here is substantial. I am aware that we have an incremental level right here at this price point. However, the next major support, again, at 2056.50, getting through this lower area here is another substantial free and clear move as we get into the possibilities of a move again on a second leg from here to here. Below that, another free and clear from here to here. Now, this is three separate substantial areas that the prices on the way up have laid out again for support as prices may turn around and continue to trade to the downside. The lack of volume here clearly supports the last three and possibly third down close today. Now let's take a look at what's behind the prices, behind the action itself, and let's look at the inherent weakness that's within this market. Now this is under the pretense that one has already looked at the Dow equities, the S&P 500 equities, and we are clearly seeing and making the case for a substantial sell-off that can happen in the near-term future because of the inherent weakness in the equities market, and again, here on our primary market as well. So because of time restraints, we'll cover the rest of the presentation regarding getting through this level and the higher probabilities of this market continuing to sell off. Let's get right into the money flow index here, and I want to look at the disparity between this data point, this price action, and this current MFI level at a negative 50.88 in real time. Once again, price is trading at 2080.50 now at 10 a.m. Eastern Standard. We have a marked difference between levels of inherent positive strength as compared to the prices here and a much lower level as compared to a price point that is only marginally on a failed try to get to, back up to and through the market's previous all-time high area. Okay, so this is substantial in nature as it clearly elicits a much lower level of participation of the institutional, the largest traders within the business, as compared to where the prices are trading right now. Now, this is a 14-period parameterized indicator that clearly finds, tracks, and demonstrates the level of strength of these particular players. So let's get into the CMF, and let's talk about what we have for a showing again. Much higher level, much lower level. But in this case, the initial trend line violation here for the break to the downside, and the intermediate term trend line here, break here, and continued momentum to the downside with no uptick, clearly leading the possibility of the prices to a much lower level. It is possible that this market can sell off from 2081.75 NTM right now down to this point, which we clearly laid out earlier as a substantial pivot point low that was laid out by previous prices. And once again, that number is laid out by the close of 3/11/2015. Again, 2032 flat is 2032 flat. So there's a lot of room to go with three separate free and clear moves that can translate and will translate if the market does trade off as expected to a series of real-time trades that can be had on any given trading day. Right now, according to the MACD indicator, standard parameters, we are market at neutral, waiting for the cross from above to below. It is possible that could happen as soon as the closing prices today on settlement will provide us with the possibilities once again of getting through the 2079.50 level, people, with a move to the downside that will give us a series of price profit targets and any one of a number of real-time trades that will clearly once again, from our perspective, outperform the markets by a wide margin. The setup is to the downside, people. Let's stay sharp. Let's track every single day the overall current state of the U.S. markets, and let's never forget to pay special attention to the contract sizing as we have a high probability trade set up to the downside on the market side as against a high probability trade set up in real time, factoring in both and crossing the bridge from the end of day analysis to real time will give us the larger profits when the market sells off because of an increase in actual contract sizing when the opportunity is there. It is now 10:03 a.m. Eastern Standard on 3/25/2010. This is Jeff Killian. For more information on what we can provide to your people, your props within your company, contact me here at theinsidetechnician.com, 617-395-9347. We'll see you on the next presentation.